Good morning, Paul Georgie from Allendale. It's September 8th, 2010. Well, the outside markets and the grain markets are all pretty quiet here this morning. We've got the dollar up 1 to 2 ticks right now. The crude oil is anywhere from slightly higher to down 15. The stock indices are actually higher here this morning, and some of the issues there, still a concern over the European banking situation and their stress test, and we've also got some problems with refinery explosion in Mexico that has caused extra volatility in the crude oil here recently. So those are some outside influences. Weather, the Hurricane Hermine has already moved into Texas, dropping quite a bit of rain in central Texas. Should move up into the southern Midwest. The question there is how far north does it move? Some estimates now suggest that we could have that storm system move up as high as central Illinois here over the next few days. So that's going to be monitored very closely. We've got around the world, Australia, wheat conditions improving there. They've had some rain over the weekend, expecting more here in the next few days. Russia also has got some rain in its dry areas, anywhere from half an inch to 1.5 inches in cases. Also something to look forward to here over the next few days. We've got some cool air coming out of Canada here over the weekend, early next week, that could cause some frost here in the upper Mississippi Valley area. So those are things to watch there, but the crops are progressing very well. The USDA came out yesterday afternoon, crop conditions report in corn dropped the conditions only 1%, down to 69%, using Allendale's yield model based solely on these crop conditions suggests that we could have a yield of 163.9. So still concerned about what is the USDA going to say on Friday morning. 7:30 they will release their monthly supply-demand report, and in that supply-demand report they will give us an estimate on yield and total production here in the U.S. We're monitoring that very closely because it will have an impact on the 2010-11 ending stocks that appear to be getting tighter and tighter with some of these yields that we're hearing around the Corn Belt right now. The funds have got record long positions in corn, and if anybody got the Allendale on the go here this morning, you can see what fund positions can do, especially in the cattle market like we seen yesterday. A sharp break broke through the uptrend area and closed sharply lower yesterday, and a lot of that selling was attributed to the funds changing their mind and changing attitude here, and that caused that market to break very sharply. So something that we've got to monitor very closely and use risk protection if you're going to play in these markets. Technically, we've got support at 452 today in the D's corn, resistance at 470, which is a year ago's June high of at this 470 area. In the soybeans, crop conditions there stayed the same, 64% good to excellent. Trade was looking for maybe a reduction, but a slight change anyway. And some of this weather moving into the southern Midwest could be supportive for these late double crop beans. Could help them considerably here, as they still have got some time to maturity. The big news yesterday was the oil sale of 90,000 tons of soy oil. That was a surprise and certainly a supportive factor to the soybean complex yesterday. Our yield model in the soybeans puts the soybean yield at 43.2 on this based on crop conditions. The wheat market news there continues to be plentiful around the world here. Russia domestic wheat prices have fallen to current low prices of $188 a ton. That is sharply below the trade here around the world. China only sells 11% of its auction this week on the wheat, and India is offering 100,000 tons of wheat to be sold. So looks like we are finding a lot of wheat coming out of the cracks here as far as that market and the availability for wheat. So we've got support on the wheat futures at 675. There's resistance on the upside here around 720 to 725 area. In the livestock trade, not much going on in the cash market. The product choice 92 cents lower, select only 1 cent lower, and I think the attitude in the cash right now is going to be maybe the feedlots become a little more aggressive and are a little more willing to sell cattle lower, simply because of this action that we've seen in the futures market yesterday, where we were down over $2, and that will be interesting to see who gets the upper hand there this week. We still got a standoff going there. Packers need to buy cattle for next week's slaughter, and we've got a short week here to do it. So we were thinking earlier that we could see higher prices in these fed cattle, but with yesterday's actions in the futures, that makes it a bit tougher to break that attitude of steady to lower prices. So we've got some time to work through there yet the next few days. In the pork side of things, we've got a market that sold off hard yesterday also on fund selling. We are expecting, in our research here at Allendale, we're expecting pork inventories and hog supplies to increase as we go into the fall, and a normal seasonal pattern that occurs. So that will keep this market in check a little bit here, and with the weak technical signal yesterday, rallies should be sold the way we look at it. Product yesterday was down 84 cents, certainly not a positive to help this cash market out either. In the futures, we got support at 74.20, resistance around that 77.65 area in the October contract. So if you got any questions, don't hesitate to give us a call. There's a lot of excitement going on here in the markets right now. We've got a big USDA report on Friday morning at 7:30. Stay tuned to Allendale. Get all those details, and you can give us a call anytime. We wish you a successful trading day, and we'll talk to you tomorrow morning.